Yo, are you struggling with something in your trading at the moment and you can't quite put your finger on what it is? Or maybe you feel like you need to do something different in order to get the results that you're after. In this video, we're going to talk about higher time frame trading versus lower time frame trading. And I've got nearly 11 years of experience in trading. I've done my fair share of higher time frame trading and lower time frame trading. So I know both ends of the argument and I know what works for me best. But I think really what you need to do is experience both of them. Maybe you've done one of them and you couldn't get the success you wanted, and then you changed to something else and you couldn't get the success you wanted there. And in this video, we'll talk about maybe why that is. And really, the thing that depends on your success with trading is your schedule and your personality and what works around your life best. A lot of people, and you may be included in this, are trying to shoehorn trading success into your life in order to improve something, in order to get a different lifestyle, in order to quit work, in order to maybe move to a different country, something like that. We're going to start by talking about higher time frame trading and the pros and cons of that from my experience, but also what you may find in your own life to be able to relate to. So with higher time frame trading, this is something I started out on back in 2015, and it's something that I stuck with up until 2022. And the reason I started with higher time frame trading is because I was in a job, which is probably something you're very familiar with. And I had to work trading around that job. I had to learn how to trade around that job. And the only way and the best way to do that was with higher time frame trading, obviously, because I could check the H4 chart, I could check the hourly chart intermittently rather than being glued to the screen. And this is great because it actually keeps your emotions in check a little bit. It doesn't test you as much. And that is really key when you're trying to figure out an edge, because obviously if you're focusing on execution and you're focusing on patterns and you're focusing on collecting data, if you're doing it on the lower time frames, you get a lot more emotional flare-ups and you have barriers to be able to consistently execute your edge. Something you don't really have on higher time frame trading because things move so slowly, things develop very slowly, and it gives you time to process those thoughts, and it gives you time just to kind of analyze things a little bit more, particularly when you're starting out fresh as a trader in the first few years and you're not totally in tune with the market, you're not totally there with your technical analysis and reading the market. And it just allows you that time just to kind of just breathe and take your time with things and then enter. Really, based on my own experience, I would recommend that you start as a higher time frame trader. And if you do find success with it to a degree where you are making a lot of money from it, maybe something that ends up overtaking the income that you have from your job, I would say that if you end up going full-time trading, you want to stick with higher time frame trading, because that's where your edge is, that's what your routine with trading is, and that's where your success is. If you suddenly start to go to try and be a bit more active in the charts by going onto lower time frames after finding that success from higher time frame trading, you're going to start the whole process again. You're going to blow up accounts, and it's going to really affect you mentally. You're probably going to burn through the money that you've saved up after quitting your job. The other benefit to higher time frame trading I found was that you could look at multiple charts, so you could have multiple opportunities present themselves at the same time. Again, it gives you a little bit more time just to kind of assess things and kind of laser in on the right opportunity that you need to take advantage of. I found personally that my personality wasn't really suited to higher time frame trading in the long run. When things inevitably get slow in the market, and market conditions can change and be ranging for like 2-3 months at a time, and suddenly the edge isn't there, and suddenly you get into trades that take 2 to 3 days that ultimately end up stopping you out, and it feels like a waste of time, and it really hampers your ability to get in multiple reps. And I believe you need thousands of reps with a system in order to be proficient with it, in order to master it and be consistently profitable. It all depends on your lifestyle and your personality. That may suit you completely. It may be that you don't want the fast-paced action of lower time frame trading, and higher time frame suits you a lot more because you are able to take your time, because you are able to scope out multiple different markets, multiple different charts to find the best opportunity and the best thing that suits your edge. However, I think, again, one of the things that comes with finding multiple opportunities or searching for multiple opportunities, it puts you in the wrong mindset. So I would say that even if you are higher time frame trading and there is the allure of having multiple charts on your watch list over 10. I used to have 16. I know people with like 30. It can end up putting you in the wrong mindset. It can put you in a scarcity mindset rather than an abundance mindset, which is really important to success with trading, because if you're out there hunting for opportunities, you're taking trades that you shouldn't be taking. But if you've just got 2 or 3 things, maybe 4 or 5 tops that you're looking at and you kind of get familiar with, then you can take things at a way different pace. And again, it's something you can revolve around your lifestyle and your job, but ultimately it may be too slow for you, and you might find yourself, as you get more experience, creeping down to the lower time frames. But I would say that if you are in a job, if you have a family like myself, or your lifestyle doesn't allow you to sit in front of the computer and give you laser focus on the charts, I would say stick to higher time frame trading. And maybe that's the type of trader that you want. Maybe that's the type of trader that you are destined to be, even though you want to quit your job and you want to sit in front of the charts and you want to be active in the markets. It may not be the lifestyle that's destined for you and where you find your success. Ultimately, you will only know that for sure if you try out lower time frame trading. And that's what I stuck to or started with in 2022. I went full-time in 2020 and I didn't have a job, and I really just went laser focus in with my trading. And I found that higher time frame trading with nothing else in my life wasn't something that suited me. I could no longer wait for hourly closes or H2 closes. And then I would start going down to the lower time frames, as I said, is kind of the trap that people go into. And I found that the better version of me as a trader is being involved in the markets, is watching the order flow, is watching the price action develop. So I started with lower time frame trading, and it is a baptism of fire with your emotions. It is a massive test to who you are, and it will improve your overall life, your personality, and your just overall persona over time, just because you need to improve who you are in order to make a success of lower time frame trading. It is where all the action is, it is where all the fast pace is, and I found over time that it suited me more to be able to get in and out of trades within a few hours rather than a few days. I liked to be able to get 2 or 3 hours in a day rather than waiting all week to get the results for a particular trade. You don't have to worry about swaps, for example, as well, by holding trades overnight. Or funding if you're in crypto, you don't have to worry about that. The downsides of lower time frame trading are really obvious. It can send you into mental spirals. It can blow accounts really easily, and that's just part of the process. But if you stick with it, it will eventually start paying trumps, because you will figure out what you need to do in order to make that a success. But it isn't something which you can do particularly in your first few years where you are distracted by a job. So let's say I've got a big 49-inch widescreen monitor, for example, for my computer. I can have multiple windows there. You may have different amounts of screens. Having your work on one screen and then having the chart on the other screen, it's not the required focus in order to make lower time frame trading success. So if you are thinking of doing lower time frame trading, I would recommend that you are able to put aside 3 to 4 hours at a time and just go all in and be able to give it your entire focus. And I would say to limit your time to a particular session, simply because it drains you mentally. It is consuming energy in the same way as if you were doing physical activity, because you're taking out so much mental energy just to kind of focus on the charts. And that's one of the biggest lessons I had to learn, was that I had to only keep it to a particular time of day, because my losses started incurring way more in the afternoon than just the morning. What do I prefer out of the two? I prefer lower time frame trading after having done both. I'm now at a point where I have a bread and butter day trading setup on the Forex markets, where I go to the London session and the pre-New York session, and that's where I look to trade lower time frame. But in the background, I like to have something in the crypto markets, Bitcoin and Ethereum, as you've probably seen on my channel. In conclusion, really, if you're thinking of doing either, if you're thinking of switching, I would take stock of, if I was you, of what your lifestyle is like, what your personality is like as well, because some people just genuinely can't hack lower time frame trading. Some people just genuinely can't hack higher time frame trading. Like I really struggle with that now, because I'm so used to the 1 minute time frame. Even if I'm on an H2 trade or an H4 trade in crypto, I still find myself checking it very regularly because I want to know what it's doing. And that's not good because it leads to over management. So you really have to kind of consider these types of things, but also at the same time, you have to experience them to know what the problems are and what the issues are. So what is better? It all depends on you. It all depends on your lifestyle. Given the failure rate in trading, more people should stick to higher time frame trading. Lower time frame trading is not for the weak of heart, and it is for the most dedicated people that really want to make a career out of it. My ambition is eventually to work in prop. So I want the day in, day out skill of being able to be a consistently profitable trader. I think that's an aspiration not many people have. Most people just want to be able to trade and live a lifestyle where they're not totally absorbed by the computer. They can go and do other things. Maybe you've got a business. Maybe you just want to go live on the beach and have some stuff running in the background with a laptop on the in your beach bag. I think a combination of the two is a kind of winning formula for me, but I really do think most people shouldn't touch lower time frame trading. I certainly wouldn't advise it. It is hell. To be honest, you have to go through hell in order to get to paradise on the other side. And that hell can be many, many years. From my own experience, again, even sometimes when I park the day trading and go to the higher time frame swing trading, it feels way better. It feels way calmer, and I'm way happier in my day-to-day life and way less stressed. So it's things to consider. But yeah, that's kind of what I think about a higher time frame and lower time frame trading. If you've got any questions, let me know in the comments below. What do you think is the best out of the two? Your next video is one of these two here. Okay, bye-bye.